The question really is whether those numbers are sustainable given the uncertainty today.
Yeah, no, thank you for having us. I think clearly for us, 2019 was a close of a 4-year period where we've had sustained strong growth. Delivering over 20% revenue growth was very heartening. Improvements in operating free cash flow and expanding our EBITDA, all those things were really good measures. And we started this year, honestly, quite strong. I'd say Q1 was pretty much on our budget for the year and doing well. But with all these shutdowns happening in our 5 markets, April was rough. And I think in May, it's really the story of Vietnam recovering as it opens up. But in all honesty, it's going to be hard to continue to deliver the group-wide results that we've been able to deliver over the last 3 or 4 years.
Quantify that for us then, Hari. What kind of a drop are you anticipating?
So it's early to call a forecast, as you know, as Linda. I think it's super hard. Things are dynamic and moving. The Singapore government announced new measures for opening up in June, some parts of which are encouraging, so the construction sector can get back to work, at least in parts, starting June the 2nd, which is very encouraging. Other parts of the business aren't quite ready to go. So I think what we are seeing is, if you look at some of the demand side metrics, so for example, total traffic just here in Singapore, January through May, it's up 6% over that same period last year. So you're seeing growth in demand for real estate. People are interested in participating. They're seeing asking prices for real estate beginning to drop. We saw that in Q1. We saw it really drop off in Q2, in April rather, as transaction volumes drop. And so the buyers are ready to go. The challenge really is you're not able to physically visit the sites. The agents aren't able to go and take their clients out. Developers aren't able to open up their booking offices. So the reality is we need to see how bad it gets in May and June before we really know how the whole year is going to play out. The countermeasure, obviously, is our second largest market, Vietnam. It seems to be having a very strong recovery in the last 2.5 weeks since that country reopened.
Hari, is Rish in Hong Kong? I'm just going to take the example of the British property market. It was also meant to be in the doldrums when it opened up, and it did open up, and there was a huge rush to try and buy property, and it still remains that way. It's only been open a short while. That confounded the critics. Can you be confounded with these markets that you cover, with the exception of Vietnam?
I think, I believe the property market's actually going to be very strong. Because if you look at some of the underlying conditions, we are at near 0% interest rates, so mortgages are fantastic. If you're refinancing your home, that's fantastic as well. You have asking prices for real estate dropping as well. You have in many markets, whether it be in Bangkok or in Malaysia, you're seeing supply gluts that are being worked off. So from a buyer's perspective, there's a lot of real estate, the asking prices are dropping, and the interest rates are low. That's prime conditions to participate. We launched PropertyGuru Finance in Q1, and what we're beginning to see is a lot of buyers and current homeowners are also seeing it as a great time to refinance their home. So that's not quite buying new real estate, but they are refinancing their home, managing their home household cash flows as well. So I think you are seeing people participate in the real estate market, but some parts of our business, unfortunately, are dependent on physical access to the site. And those parts will have to wait for the lockdown to ease up in the coming months.
Well, Hari, this brings you don't have to visit properties anymore. Though, of course, you will do when you're out there shopping for one. It's just that looking at the post-COVID world, there's going to be more of that distance that people are talking about. Now, tell us about FastKey. That is one of the ways you can now visit properties without having to go there, very briefly.
That's correct. So FastKey Storyteller is a solution that we expedited in the COVID world. It was part of our solutions, to be honest, but we sped it up to get it fully ready for the market. What it does is it allows people to remotely view and visit properties under construction real estate, which are normally just construction sites. You can remotely view it through an immersive virtual experience, but you're also able to see the availability of units. So developers are not just able to show their visual, sort of do walkthroughs, but they're able to actually display what's available for sale and then even take bookings if necessary. And from the developer's perspective, they're able to now access remote buyers via agents who might be in their market or agents who are overseas. all through an agent marketplace that connects to them on FastKey. So FastKey is really set up for even for a post-COVID world where we do expect that international travel will drop. So real estate buyers may not be flying in and out of our region quite as much. They need to be still able to visit or view rather what's available and what are the floor plans, the walkthroughs, etc. And all of that is facilitated through this end-to-end solution that we are calling FastKey Storyteller.
Hari, there are expectations that post-COVID, more and more people will decide to work from home. Will that change the way buyers buy their homes? What are you anticipating?
Yeah, I think that's a great question, Aslinda. What history has taught us is that at times like this, people are going to, if they can afford it, if their household incomes have not been impacted and there are no job losses within the family, people will try and upgrade their homes. I think what's unique to COVID is you're going to have a lot of people working from home, such as I am doing right now, and the need to have workstations for multiple people, potentially for children as well who might be doing homeschooling, means that people might, as long as their budgets accommodated, look to upgrade their home, go for slightly larger homes as well. So I think that's something that time will tell. I think in developed markets, we fully expect that it'll happen. Here in Singapore, I think it's likely to happen if people can afford it. But it'll be interesting to see how it plays out in some of our other more emerging economies as well.
Do you think that would have an impact on property developers?
Yeah, I think the property developers are looking at everything end to end, right? I think it's a long gestation cycle for them. They've started planning. So real estate that will come on the market next year is already well into planning stages. It might be too late for many of them to make changes. But I think what you're going to see is developers look at ways to manage technology to facilitate marketing and sales, and then for some of this data to inform them about new developments they haven't started yet. So they might look at larger floor plans, fewer units, maybe ways in which to accommodate working from home, solutions like that. These are not benefits or solutions that offices or frankly real estate developers have had to think of prior to COVID. But I fully anticipate that we're going to see some of these changes in the homes of the future. So the smart homes might need to incorporate the fact that you got home offices much more commonly than they are today.
Hari, if you talk about property, you have to talk about property prices. If you take a look at the prices in Singapore, they've remained resilient despite the pandemic. What are you anticipating for home prices post-pandemic? Do you expect a surge?
No, I do expect, the prices have started to come down. And to your point, they haven't cratered. They dropped by about 1% in Q1. So in Q1, as I mentioned before, Singapore went into lockdown. We actually saw a glut of listings on PropertyGuru. So property listings actually went up significantly and asking prices started to come down. Essentially, supply was much higher than demand at that point. And we fully anticipate that combined with the fact that there are a lot of new construction projects that will come online post-COVID means that there will be a slight downward pressure on that. But Singaporean real estate remains robust because it is a dependable economy, a strong jurisdictional system. And so you have foreign buyers coming in as well. And despite all the cooling measures that have been put in, luxury real estate still has very strong demand coming from mainland China and other places outside of Singapore. And then for the regular sort of folks here in Singapore, real estate remains one of the most attractive asset classes for investment. So I do believe that there'll be some downward pressure because of some of the measures I mentioned earlier, but it won't collapse completely simply because demand remains very, very buoyant in Singapore.
Hari, final questions from me. If you look at all the 5 countries that you do cover, which housing market there do you think offers the most promise looking ahead? And I'm talking about the value, perhaps upside potential, and also legislation which supports you buying property there as well as a foreigner.
Yeah, I think that's a great question. I think one of the markets where it's really a good buyer market for a foreign investor would be Thailand. I think in Bangkok, there's a lot of supply, good construction of real estate, high quality developers, and a decent force of law as well. Singapore is always the best in our region in that sense, but the real estate tends to be more expensive. But for those who are willing to take a little bit more of a risk, and I don't consider it a big one, to be honest, I would encourage them to look at Vietnam. I think Vietnam's going to have the most upside. You're going to see the most appreciation of pricing. You see 100,000 people move to Ho Chi Minh City every year. They need homes. If you make a real estate buy, it's quite possible that they might become a tenant for you. And so I think that's a very attractive market that you should keep your eye on for the next 2 or 3 years.